What's going on, everybody? It's Stas here. Welcome back to another video. So as you guys read in the title of today's video, I just wanted to go over what dividend investing is and how you're able to build a strong dividend portfolio over time. But before I get into the topic of this video, for those of you guys that have yet to join my Facebook group called Strive Smart Strategies, make sure to join this group, guys. The links are going to be down below in my description, as well as the first pinned comment down below in the comment section. We're going to be talking about stock market investing, trading, entrepreneurship, building wealth over time, financial freedom, and working together as a community, networking with each other in order to help each other grow and build wealth over time. That's the whole entire idea of this group, Strive Smart Strategies. So make sure you guys get into this group. We have about 31 members as of today, and we're growing pretty rapidly, guys. So make sure you hop into this group. Again, links are down below in my description, but let's talk about now what dividend investing is. Just a quick little overview of what it is and how you're able to, create a strong dividend portfolio over time. So let's just quickly hop into it, guys. What is dividend investing? I'm going to pull up my Fidelity account here just so we can slowly go over some strong dividend stocks. But before we get into the dividend stocks, dividend investing is a very good way for any investors out there to create a cash flow and create passive income for themselves in terms of dividends. And let's just quickly hop into what dividends are for those of you guys that don't know. So whenever a company is producing revenues, whenever a company is making profits, they have the option of either putting those profits back into the company in order to help the company grow, or they have the option of taking those profits and paying some of the profits back to the shareholders in forms of dividends. So usually, guys, we see companies that, are not in growth mode anymore, including some of the companies that I'm going to be showing you guys right now, pay more dividends back to the shareholders instead of putting more money into the company in order to help it grow, right? Obviously, companies like Facebook, companies like Micron, companies like, Alibaba, these big growing companies, they're not really paying money back to their shareholders. Instead, they're putting more money into the company to help the company push to the next level, right? That's why we really notice the strong paying dividend companies are companies that have been here for a very, very long time, including some of the companies that I'm going to be showing you guys right now. So, very good in terms of producing income is what dividends do for you, right? This is why I really recommend people to establish a dividend portfolio from a very young age, right? Especially if you're in your early 20s, mid 20s, even in your teenage years, guys. If you're in your teenage years, you should be starting a dividend portfolio. It doesn't matter if it's a couple $100, because what we're going to be talking about in that later on in this video, which is compound interest, the earlier you start, the better it is. So now let's look over here to a couple of dividend paying stocks and what you want to look for in terms of investing in a dividend paying stock, right? So at&t, the communication giant, this is one of the strongest dividend paying stocks in the stock market, right? And let's look at their dividends to see how long they've been paying a dividend and, what we look for in terms of a dividend paying stock. So the first thing we want to see in terms of a dividend paying stock is that the company is very consistent with that dividend, right? In terms of paying it out quarterly, in terms of not missing any quarters of paying the dividend out, as well as the dividend increasing over time, right? And we can notice here with at&t from 2008, right? Their dividend has been increasing every single quarter pretty much, right? It has not really taken a hit any quarter that we've seen here from 2008, right? We see here quarter 4, they paid out a 40-cent dividend. The next year in quarter 4, 41-cent dividend. The next year, 42-cent dividend. The next year after that, 43-cent dividend. And we see the pattern of just slightly increasing the dividend every single year in terms of at&t stock. So the number one thing, and usually the primary thing we want to see is, is the company consistently paying out dividends, and is that company consistently increasing their dividends? So, over the past 8 years, AT&T, or 10 years rather, AT&T has been growing their dividend, right? And I believe they've actually been growing their dividend over the past 30 years, but let me try and see if I can find that for you guys really quickly here, the long-term dividend chart. Let me see. I'm not really sure if I can pull up anything past or prior to 2008, but you guys get the idea, right? We want to see consistent growth in the dividends. So that's ticker symbol AT&T. We want to look at another one really quickly. Pepsi is another very good dividend paying stock, and I have both of these stocks in my dividend portfolio myself. Let's quickly just look up Pepsi. So Pepsi, guys, let's look at this one. We see, just like AT&T, right? Pepsi has been increasing their dividend every single quarter, even more than AT&T has, right? You know, we've seen in 2008 quarter four, 42-cent dividend, right? 2009 quarter four, 45-cent dividend. 2010 quarter four, 48-cent dividend. Hopping up to 2014, they're paying a 65-cent dividend per quarter. And you know what this means, guys, that AT&T, or excuse me, is that Pepsi is generating more and more profits every single year, and they're just bumping their dividends and bumping their dividends, and they're making their shareholders happy, right? This is the whole idea for companies and their incentive in terms of providing dividends for the shareholders. They want to make their shareholders happy. They want to make their shareholders stick around. So increasing the dividend year after year, quarter after quarter is a great way for companies to keep shareholders around, right? And that's why I personally own Pepsi and I personally own AT&T. So now let's quickly talk about compound interest and why you should be creating a dividend portfolio from a very young age. So investing 101, the concept of compounding. And for those of you guys that don't know what compounding is, I'm going to give a quick little brief overview right now of what that is. So compounding is the process of generating more return on an asset's reinvested earnings. So what this pretty much means, guys, is that let's say you own $500, or let's not $500. Let's say you own 20 shares of AT&T stock, right? You own 20 shares of AT&T stock, and let's say they pay out 50 cents per quarter in terms of dividends. So you're going to be paying or being paid $10, right, per quarter in terms of dividends. So what you want to do with these dividends in terms of compounding your portfolio is, instead of taking out your dividends and putting them in your checking account, spending that money, you want to instead keep that money in your portfolio and reinvest that money back into a stock, or you can just buy the same stock, or in this case AT&T, and just continue buying more and more shares of that stock. And the whole idea of this, guys, is that over time, your portfolio is going to continue to massively grow because you're feeding it, continuously feeding it and feeding it and feeding it more money. And with more shares you're going to be reinvesting into AT&T in this particular example, you're going to be getting more and more dividends each quarter because you're going to be having more shares of that stock. Do you guys understand what I'm saying here, right? To work it requires two things: the reinvestments of earnings and time, right? Time is very important for this to work because you need to have a lot of years under your belt of quarterly dividends for this to work. Let's say you have 10 years of quarterly dividends. That's 40 quarters of dividends, right? And let's say you reinvest all of that money that you're getting in those 40 quarters of dividends. Just think about how big your portfolio is going to be after 10 years, let alone 20, 30 years, guys. So you got to think about this as a numbers game, right? So for younger investors, or let's hop back here before this. Compound interest can help your initial investment grow exponentially, like I just explained, right? For younger investors, it is the greatest investing tool possible and the number one argument for starting as early as possible. So like I said in the beginning of this video, especially if you're a teenager or in your early 20s, it's a very good idea to start out with a You don't have to have thousands of dollars in your dividend portfolio, because the time factor here is what's going to allow you to compound your interest over time, right? So just starting out with $500 to $1,000 in your dividend portfolio will allow you to build a massive fortune over time, right? And especially if you're adding more money into this portfolio from your job, from your income sources, as well as reinvesting the dividends, right? You're going to build an insane portfolio. Let's say if from 20 years old, by the time you're 50 years old, guys, you're going to have a nice wad of cash in that portfolio, right? So this is pretty much the entire video. I hope you guys enjoyed it. Dividend investing is very, very important, and everybody out there should have a dividend portfolio in order to produce cash flow over time and produce an investment portfolio that you're going to be able to compound into a huge, massive fortune over the time of your life. And in other ways you can do this, guys, instead of compounding your interest, instead of reinvesting, let's say you have a lot of money, let's say you're 50 years old now, you don't really want to be reinvesting your earnings, you can now live off of that dividend portfolio. Let's say if you have like a couple $100,000 up to $1 million, $2 million in your portfolio, right? That's like a lot of investors' goals, is to be able to live off of their dividends, right? That's personally one of my goals, not really to live off of my dividends, but have dividends be a strong source of my personal income, because I want to build a passive income source, and I believe dividends are a very good way to do so. So if you guys enjoyed this video, feel free to drop a like, leave a comment, and subscribe. Follow me on Instagram, follow me on Twitter, and join that Facebook group down below in my description, as well as the first pinned comment down below in the comment section. And do not buy or sell any stocks or ETFs based off of my opinion, because that is not how you're going to become a self-sufficient trader / investor over time. So let's make some money today, guys. Hope you enjoyed the video. Again, I'll catch you guys in the next one. Peace.